Everyone, welcome back to my YouTube channel Manu Issue ACCA classes. So in this video, we will be learning about statement of profit or loss and how we calculate in case of absorption costing system and marginal costing system. So in this video, we will be only learning about absorption costing system because the question that one of my viewer asked is based on the absorption costing, and after discussing all these topics we will move towards the question. Okay, in previous video I had explained about absorption costing and marginal costing difference. In case you haven't missed it out, please try to go over my channel, and there is separate playlist I have been created. You can find this video at the free of cost, right? Okay, so let's start our today topic, absorption costing and statement of profit or loss. So basically how we will calculate, if question asks us to calculate the profit based on the absorption costing, marginal costing, and it's very common question and frequently asked. So let's start. First of all, we will take the sales in both of the cases we will take the sales. If we look out the marginal costing as well, I have taken the sales. Yeah, all right. So, and this is very common to calculate the gross profit. What we used to do, we used to deduct the sales minus cost of sales, right? And we get our gross profit. But here is slightly difference in the calculation of the cost of sales in the both of the system. Let's first learn about the absorption costing. First we will take the sales, that means your sales unit into the sales price per unit, and then we will deduct this cost of sales, that's the production cost. So here, to calculate the formula of cost of sales is opening inventory plus purchase minus closing inventory, right? So here we will consider opening inventory plus production less closing inventory. So and for the production we will take both variable and fixed. Why? Because as I mentioned in the difference that here while we are valuing our unit, means our goods, in that case total production cost need to be considered, and total production cost means your fixed cost plus variable cost, right? So that's why we need to take both variable production overhead as well, that's the production unit, into the variable cost per unit, and fixed production overhead. Yeah, but here we will take absorbed one. And how we will calculate absorbed one? Production unit into OAR. And I have already been told formula of OAR in case of when I was describing about the difference. Just go and watch it out my video. Okay, and then we will deduct the closing inventory, and again it will be value at the full cost, that means total cost plus variable cost, right? And then we will deduct it from our sales, right? And after that, if we need to adjust the under and over absorption as well. And how we will calculate under over absorption? We will take fixed production absorbed one, then we will deduct actual variable cost. In next video I will be doing a question, it will be more clear. And one thing I had mentioned in the previous video, that in case of marginal costing, there will be no under and over absorption. But in case of absorption costing, it will be. So that's why we need to adjust in case of absorption costing. So if it is under absorption, we need to deduct. And if it is over absorption, we need to add back. Right. And how we will calculate, I have just kept here formula, and in previous video as well I have explained about this. Just go and check it out my video, right? And then we will arrive at our gross profit. Okay, then we will deduct our non-production cost, and then after that we will get our net profit or loss, right? So now you might be seeing a note blinking over my screen, right? So basically what I mean to say, the here opening inventory, variable production overhead, and the fixed production overhead, this will include both all the direct expense, and it will consider both variable cost as well as fixed cost. Basically, in case of absorption costing, the cost is divided into the production and non-production one. So above gross profit, whatever the cost is above the gross profit one, it's a production, and it will include both fixed cost as well as variable cost. And below the gross profit, it will only include non-production cost, and it will be both variable cost and the fixed cost, right? So here we will arrive at the net profit or loss. I hope this is clear. So in the coming video, we will be talking about the marginal costing in the same manner, and it will be easy for you guys to remember during your exam time. So stay tuned with my channel and don't forget to subscribe and hit the bell icon. So thank you so much guys for watching. Have a good day.